Alrighty. Good evening. How's everybody doing? I hope everybody's doing well. We're gonna kind of run through some interesting stuff that I found tonight. I did tell the group that I would try and look through and see if I'm able to find anything else out on the new bill and everything. And I think that looking through all that, there's a lot of things going on. So I want to kind of discuss that with you guys and let you kind of know like what exactly I'm seeing right now. Very, very interesting stuff, though. Very interesting stuff. Hold on 1 second. Sorry, I just need to move that. All right. So we're gonna go ahead and get into it here in just a minute. So I was a little bit more pessimistic, I would say, towards towards the whole tax bill and stuff like that. There's a lot of scammy, really scammy stuff in there, but there's some pros in there too. I kind of took a deeper dive into it, and we'll discuss that here moving forward. I do want to discuss the new tax bill that the Democrats passed in the House. I want to also discuss the charts. I want to discuss price action, kind of how the market's reacting to the CPI, what my thoughts are on the CPI. I think all these things are pretty important for us to kind of understand, what structure can do and where structure can go. That's the important thing at the end of the day, is trying to figure out that information, because hey, we're here investing, right? All right, so we're gonna go ahead and get into it real quick. Let me just kind of line everything up real fast, and then we'll run through it really fast. Give me just a second. I also went through labor and a couple other articles I found pretty interesting that I think we should take a look at too. And some definite good info here. All right, so moving into it. Oh, wrong one. All right. So basically, if we kind of look at everything here, one thing I ran through, and let me know if the music's too loud. I can kind of dial it down a little bit. Let me just go ahead and try and run that down a little bit. If it's too much, just let me know. I'll bring it down a little more. So here's what's in the Inflation Reduction Act. So I would say this first off: there's nothing in here that will reduce inflation. So this name is completely false. I would say at the same time, there's a lot in here that won't necessarily make inflation worse, but doesn't really, like, everything they're doing is kind of counterintuitive, right? So they're like, oh, we're going to tax the rich, but there's a lot of things built into the bill that will benefit the rich, and we'll discuss that moving forward. All right, let's move into the medical portion first. So the prescription drugs. So I looked at the prescription drugs. I took a deep dive through this. We got estimates 740 billion. Hold on 1 second, guys. Sorry, just want to dial it down a little more on my end. All right, so I'm not interested in the convo up here, but more of the bill, right? So we got the $740 billion bill. We got the 2,000. Those include capping prescription drugs costs at $2,000 out of pocket for seniors, helping Americans pay for private health insurance, what Democrats are calling the most substantial investment in history to fight climate change. Some 300. So just to get this started, okay, I'm all on board with medical, all on board for that, right? There's people with that need insulin and stuff like that. They need medicine to survive. And yeah, they can work and earn the money to pay for it, but insulin's like ridiculously priced. I'm not gonna lie. Like, you can get it in Mexico for much cheaper. So I think there's some pros to this, but from what I'm seeing in the bill, everything is based around elderly, right? Which, if we think about it, and I'm not at all trying to be disrespectful to elderly people, but a lot of the elderly people have, kind of moved on because of the pandemic. So if we look at that, there's not that many elderly people to cover with this bill. So I'm not sure why they didn't really just kind of try to help everybody with this bill versus elderly. But like, when you read through everything in here, it's more based towards elderly. But kind of moving through it, it keeps drug costs at $2,000 out of pocket cap. I'm not sure, because it's not very descriptive. Does that mean per year? Does that mean per 5 years? Does that mean per billing cycle? Like, how does the 2000 work, right? So it's a very interesting subject that I think that I'd like to dive into a little more. This was something I couldn't quite get the info on, but I got some info on the other ones where they're putting money in other locations. Almost half the money raised, 300 billion, will go towards paying down federal deficits. So for those of you who don't speak manipulation, federal deficits is though $300 billion. About half the bill is going to pay off what the government is negative on off their books. So the trillions and trillions and trillions of dollars they've been spending on this random stuff, well, now they're taking $300 billion more to pay off their debt, the government's debt. That's what they're doing with that money. That's what federal deficits are. So, hey, we've created this debt here. Now we're going to take your tax money, even though we used your tax money to create the debt, and we're going to pay off our debt with your tax money too. So double dipping. The insanity is crazy, and that's almost half the bill in cost. It's all paid for largely with new corporate taxes. They're saying it's going to be paid for with new corporate taxes. I'll show you where that's false. This is a false narrative, and I'm going to show you that moving forward. They're saying that they're going to basically push corporate to pay 15% as a minimum barrier to entry. And the average for corporate is supposed to be 21%. And they're even stating in here, if you read through this, that some corporates are paying zero with the write-offs they're doing. So some corporate companies are paying nothing. Some corporate companies are paying, maybe 5%, 10% because they're writing a lot off. They're going to force them all to pay 15% or more is what they're saying. Now, on the surface, that looks great, right? It's like, okay, they're going to charge all corporate companies 15%. And I wouldn't say it's great because obviously it's going to get passed on to the consumer. It's going to get passed on to the employees. Somebody's going to pay for that. So looking at it on the surface, that looks great, but we're going to get into that here in a minute. So I want to continue with the medical real quick because we're already at this portion. So federal government's some $288 billion over the next 10-year budget window. So what they're doing is launching a long sought goal to allow Medicare programs, the worst medical we have ever had. Like, Medicare just needs to be eradicated. They need to come up with a new system to negotiate prescription drug prices with pharmaceutical companies. I mean, are they going to call them up and tell them, hey, we're not going to pay this? Okay, then we won't sell it to you. I don't get what they mean by that. Are they getting kickbacks to get prices cheaper? Like, how is this working? Why do you need $288 billion to do that? Those new revenues would be put back into lower costs for seniors on medications, including a $2,000 out-of-pocket cap for older adults buying prescription pharmacies. Now, if you notice here, they don't include ages. So if you've noticed also, as years go on, they keep raising the age of retirement. It used to be 55, then 60. Now I think it's 65 because they're trying to keep you from getting your money before you kaput. The money would also be used to provide free vaccines, yada, yada for seniors. We know where that goes. Seniors would have insulin prices capped at $35. That's what they're saying. I still think $35 is obscene. You can get insulin, I think, in Mexico for like $20. So they're not really doing them any justice. But this is $35 a dose. A dose. Most people take insulin every day. So good luck with that. A provision to extend that price cap in insulin to all Americans, everybody who needs insulin, right? They were going to make a provision to that, but then they scrapped it. And they're saying that it was, based on the other party. I'm sure both of them negotiated this because the thing is they had the majority. They could tell them we're putting whatever we want in the bill and we're just passing it, which is what they did, right? So this right here is they didn't even have a say, I would say, in this bill due to the fact that they had the majority. Help paying for health insurance. The bill would extend subsidies provided, during the thing to help some Americans who buy health insurance on their own. So I don't know what they mean by this because if you're buying health insurance on your own, you're probably a business owner. If you're a business owner, you're making more on average, I would say, than most employees, right? I mean, there are those scenarios where that's a little bit different, but I would say for the most part, you're going to make more than your employees. Single biggest investments, the change. The bill would have invested 375 billion over the next decade. Okay, these are extended bills too. These are not money that they're going to pull right now. This is money they're going to create through taxes and extract that from us. That's essentially it. They're going to extract from us. They're going to extract from corporate. That's what this bill is about. So the bill is not about, as much as I thought it was about injecting money, creating money. It's more about creating taxes, right? And then taxing us and using that money towards these things. That's what this whole bill is about. A lot of people, like, it's mind blowing because I was just like, if they're going to print off 700 billion, that would be an issue. So looking at it from that perspective, it's like, okay, that's why they hired 800 or 80,000 or whatever IRS workers, because they're going to go after everybody. They want this money. It's broken down, includes 60 billion for clean energy manufacturing tax credits, 30 billion for production tax credits. Let's see, 4 billion to combat droughts, whatever that. I mean, yeah, some places are in drought areas, but how are you going to combat droughts? How is money going to combat droughts? You're gonna bring water from the other location in the U.S. to those locations that have droughts? I don't get that. And all Democrats believe the strategy would put the country on a path to cut greenhouse gas emissions by 40% by 2030, and would represent the single biggest climate investment in the U.S. history by far. So, I mean, the U.S. doesn't really produce as much as other countries either, so we'll see. New corporate minimum tax, the biggest revenue raiser in the bill, is a new 15% minimum tax on corporations that earn more than 1 billion in annual profits. It's a way to clamp down on 200 U.S. companies that avoid paying the standard 21% corporate tax, including some that end up paying no taxes at all. The new corporate minimum tax would hike 2022, 258 billion over the next decade, yada, yada, yada. Okay, so what they're saying here, all right, is they're saying that these places, they're going to raise their taxes. But counterintuitive, they're saying, hey, if you do our agenda, we will cut your taxes. That's what this is. That's what this is right here. This is not what people think it is. This is a tax cut. That's what this is. Once you read through it and understand it, it's a tax cut. It's do our agenda, play our ball, and you can avoid paying your 15-20%. It's another loophole. It's a loophole to this whole part. This part of the bill might as well not even be written, because all they got to do is any of these things. Any of these things. Oh, we're donating to this place for droughts. Oh, we're doing this for that. Oh, we're going to build all of our new buildings green. That gives them carbon footprint tax credits. They get out of taxes by doing that. Billions, because they're allocating this much money to be cut from their taxes if they do it. You see how this works? This is a way of manipulating corporate America into following what the government wants. And vice versa, right? You got some that are playing ball with the government. Those ones are kind of doing the same thing. Now, you're probably like, why are you talking about this stuff? Why do you keep discussing this stuff? Because these things right here specifically are going to create more hardship on the current tax rate hikes that we already have. It's going to create issues for us economically. All right, extra money right here, exactly as we discussed, toward deficit reduction. Federal deficit spiked during the thing when federal spending soared and tax revenue fell as the nation's economy churned. Hey, we had to foot the bill for you guys for a while from all the money that we had from you guys. Now we need all that money back and some. That's all this says. That's all it says. All right, so moving into the next part. So this is a better breakdown. So there's a couple things I want to get into in here specifically. So they have, now this is the way better breakdown. They had the production tax credit, the PTC. The IR Act extends PTC, which expired at the end of 2021. So this was getting ready to expire. For renewable energies until the end of 2024, qualifying resources include wind, along with renewable resources such as biomass, municipal solid, yada, yada. You get the deal. We don't have to go through all that. The base credit of PTC is 0.3 cents per kilowatt. So essentially, any place creating power or using power, if they're abiding by production tax credits, they get a reduction on their taxes. These are tax cuts. That's why when they say we're going to tax the rich, it's like, dude, you're not going to tax any. In the bill, the one we just went over here, they clearly state we have no way of taxing the rich themselves directly. By the way, it literally, to win over right here, to win over Cinema, a Democrat, right? Or she's a Democrat. Democrats dropped the plans to close a tax hole loop long enjoyed by wealthier Americans. So-called interest, which under current law, wealthy hedge fund managers and others at a 20% rate. So this person refused this portion of the bill, and they all agreed to it and said, okay, there's no wealthy people being taxed. And the only people that they're attempting to tax are corporate America, the portions that are not abiding to the agenda, right? This is why you have to be careful with a lot of these things, because, you know, you can get sucked up and you can kind of believe this and that, but like, this is why you have to do your due diligence and dig into this. Again, you know, this is more jargon speak for Green New Deal, Invest Tax Act. So the IR tax. So these are basically the credits they will get. So these credits will get them out of taxes. All of these, look, hydrogen production, investment, carbon capture. Carbon capture is easy to achieve. If you know construction, the worst company out there can do carbon capture and just the most ridiculous way and get a tax credit for it. Invest tax credit, electric vehicles. So this is a good one. This is a good one. The IR, now this is directly from the bill. The IR Act provides up to $7,500 income tax credit to lower and middle income consumers. Only to lower and middle income consumers for new EVs, and a $4,000 tax credit for previously owned EVs. Only vehicles whose final assembly occur in North America will be eligible. You guys get that? How many cars are made only in America? The credit will be lessened or eliminated depending on the purchaser's income. So if your income goes up, guess what? If you're out of the tax bracket, you don't get the tax credit. So you can get it lessened. So let's say I make 75K and you make 30K. Well, you can get the whole tax credit, but because I make 75K, they're only going to give me 3,000 tax credit. How is that even? Yeah, I make more money, but I'm still not rich. You know, everybody still pays bills. They're literally layering the U.S. in a way that separates us by class. Let me see here. Claiming foreign entities concerns, which is defined as state sponsor, or I don't know what this is. So the bill prohibits manufacturers from claiming the credit if the vehicle contains minerals that were extracted, processed, or recycled by a foreign entity or of concern, which is defined as state sponsors of the word or countries blocked by the Treasury Department, aka starts with an R, and other countries we've had issues with. So if any of those parts in that car come from any of those countries, guess what? They're exempt from the tax credit. 30% tax credit purchases of new clean. So if we look at this bill as a whole, it's eliminated the tax credit, so now nobody will get it, and in a sense kind of made it almost impossible to get. So they've pretty much hurt the middle class in this way, right? So they're going to continue to push gas prices up. There was another part in the bill too where they plainly said, we're going to tax anybody who's creating a carbon footprint of X, and we're going to reduce, people that have like electric vehicles. So essentially, I think at some point this will come down to us as the people being taxed for owning a gas car versus electric car by a certain percentage. It's almost ridiculous the direction they're going with this. Like, you can't tell people what they have to do and make them pay more because, of your belief at the end of the day. Advanced manufacturing tax credit. So under the DYOR Act, domestic production and sales of qualifying components would receive Section 48C advanced manufacturing tax credit. So we've got this. We got this zero emissions in nuclear power, basically your power plants, which create the most emissions out there. Clean fuels, right? Which I'm pretty sure gas is not on there, provides an extension of the $1 gasoline exercise tax credit to biodiesel and diesel mixtures. Yeah, that's just an old one. Energy efficiency tax credit. I don't know what this HALU funding is, but either way, you guys get the gist, right? This is basically what's going on right now with this stuff. I wanted to cover this because it's kind of important to understand the purpose of the bill and understand the impact's going to be. It's going to be more detrimental to us than it is going to be to basically the country, right? Or not the country, but basically to inflation. So I think long term, we could see inflation kind of continue to roll out as they're taxing us for these things. We got a couple other things we want to look at too. One of those is job numbers, which we're going to discuss. So for tech workers who missed the window for IPO market, yada, 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 they're basically stating that, people need to kind of keep their heads, on the ground and less in the clouds. And that, the boom and bust has already happened, and that people should just avoid stocks and stuff like that. That's basically what this statement is. Nothing big. I'm not going to go through it. Gangbusters right here. Job growth adds more confusion to recession worries, economists say. So essentially this whole article right here, job growth doesn't signal a recession, at least not yet. And I think this is how a lot of economists feel, is that the job expansion that we've been having hasn't signaled a recession. But typically, if you go back through history, all right, and you can go back and verify this yourself, typically you're going to see in a recession that jobs explode before a recession, not after. So I know we feel like we've been in a recession. I think we have been in at least a light recession, right? But we could be getting signaling already from that, right? Average hourly earnings are up 0.5% for the month and 5.2% from the same time a year ago. So average earnings are up 5.2% from last year. This means that wages are following growth. They're following inflation. And what could happen is wages could end up continuing up. Inflation could end up dropping. And then guess what? If wages get too high, inflation goes down, they have to sell things for cheaper. All those people that are going up in wages are getting fired. And now you're gonna get the follow of job losses behind the inflation drop, right? So it's gonna be like a double whammy. We're gonna get hit probably in 2 or 3 waves, I would say, the way that this thing's setting up. So I would be careful with that. Job gains remain uneven for the government. Wouldn't really go through this that much. I don't know the government statistics on all this stuff, but I do know one thing here. They said that the government was down 600,000 employees. They're negative 600,000 employees. So they've actually declined and contracted in hiring. They're 600,000 less employees than they were previously. 70% of workers are optimistic about the job market, if not the economy. Yeah, and I would say that's again because jobs are continuing to follow up, wages are continuing to climb, And, even if inflation gets under control, once the wage curve follows behind, all those people that kind of caught the top of the wages, they're going to get cut. Every one of them. That's going to be a lot of job losses. 1% of the workforce in June, yada, yada, yada. Let's see. So this one's an interesting one too. Recession relief or hard landing. Basically, we got downturn delayed, U.S. recession fears, so on and so forth. I think I want to say this. I think the worst is behind us, right? I think that's the best way I could say it, really. The worst is behind us, I would say. And in reality, what we're looking at right now is we're looking at kind of catching that final wave, because I think we're kind of in that stage. I'm not bearish. I want you guys to understand that. I'm not necessarily bearish. I'm not bullish either. I'm kind of like market neutral. I said this earlier today. I had somebody kind of bring it up to me, and I was just like, I'm not really bearish right now. I'm more market neutral. Like I'm willing to play in the market, right? If I was bearish or that bearish, I wouldn't be playing in the market. So I'm willing to play in the market. I think the market does have liquidity right now. I think there's liquidity moving into the market. There's definitely a lot of optimism, right? A lot of euphoria, since we kind of gotten up in these ranges. That euphoria is going to lead into people getting wrecked. But yeah, I definitely think that. But either way, I'm looking for this consolidation at the end of the day, right? That's always my key here. If I can't catch consolidation, then I'm not willing to play, for it's a bottom. I'll play that if we can catch consolidation. Now you probably see this, you're probably like, oh man, he's saying we're gonna go deeper. It's a possibility at the end of the day. This is not definitive, right? These are just zones that I'm watching. We use this as a conversational piece earlier today. You got your breakout wedge here where price kind of shot out. And then you got your breakdown wedges, your inclines, your declines. I want to just kind of show you guys how this works real quick live, because I know a lot of people may not understand, wedges and all that stuff like that. So price moves in a direction, it kind of takes off, right? This is momentum. This is price action. This is climbing. Typically what you'll see in a climbing market, and a lot of people, they probably look at this and they're like, oh, well, that looks similar to this. Markets don't move like this after a drop, right? They can move like that after sorry about that. Let me fix that out. They can move like this right here after consolidation. Yeah, they can definitely move like that after consolidation. And you can see here where price came down and then we bounced up, and really I think market was going to take off here. But then we had the thing, and then the thing forced the market down, and then we kind of came back over and leveled out over here, and then we started moving back into that trend. And then price fell back again, people thinking that price was going to go lower, and then price took off. But this didn't happen. This did not happen until way later. Look how long this is right here. So I'm just going to cover BTC, and then we'll run through the charts on other coins too. If you look here, we're looking at roughly 635 days. That's almost 2 years on the floor. That's why when people are being super optimistic right now with this current move, it's like, you're not missing anything. There's nothing being missed here. Price action, yeah, it blew up here, came right back, right? And you could be like, well, that was because of the thing. Yeah, it could be because of the thing, but typically we consolidate for quite a few months on the floor here. If we look here just on the consolidation period for the low, and these are things that I'm really paying attention to, right? You got 136 days right there. If you look right here where we've been, what do we got? 59 days. We've been here maybe a month or two, maybe. That's why we just got to kind of relax a little bit and just stay a little more level-headed. If you look here, how long were we here before we dropped? 20 more days, right? Got to be careful with getting too FOMO'd into the market. Some key takeaways I would say too with Bitcoin, something I'm watching for is you could see right here, Bitcoin was pretty much stuck, right? And once Bitcoin broke out over here, and we're going to run through stocks too. So we got a lot we're going to go through tonight. Don't worry. I just had to rant a little bit, I guess, show you guys kind of what that what that was actually about. So you've got the move to move up, right? And then it looks like it's going to break out. Now, these are the traps that they've been putting people in. So you got the solid top, you got the move up. You could have even drawn this like this. Look, I could have even drawn a bearish channel. Now, did price really get up there? Not really. So, it'd have been a hard one on this. This was what I was watching originally. I was kind of watching a bear channel here to later find out that it was a rising move that would end up ultimately breaking out. So I'm going to show you guys something interesting real quick. Let me pull it up real fast. This over here. We'll go here. And we'll go here. So I want to show you these patterns and kind of like how they move. I think this is the right one. No, not that one. I think this one. Sorry, I didn't have these open. So understand that, like, when the pattern comes from the top, it plays the wedge, and yeah, it did break out, but typically it breaks down, right? When it comes from the top. When it comes from the bottom, it plays the wedge and it breaks out to the upside. So these bullish pennants, bearish pennants, these are things that you should always watch for, right? And they could even be like the cap top and then the rising price. But when you start to get that cap, that's where you start to see those issues. So looking at that, we kind of have a similar move over here with Bitcoin. The thing is with Bitcoin is Bitcoin's a really interesting one because it's not technically doing that right now. Bitcoin has kind of gotten above its zone, so it kind of shifted away, as you can see right here. The only thing I'm not really liking with Bitcoin is the fact that it dove this deep, right, in price action. So the fact that it came back down and retest, and I did expect this, right, because your swing was right here. You got your OB, right in this zone, and you got your support on that. So if you're to look at it on a daily standpoint, like this right here would be your OB, right, all the way down there for this move. You got price that then supports, right? So right now, price action looks good. Looks good. It's not bad. The build's been there. We've discussed the build. I've told you guys, hey, this is a possibility, right? So we should always keep that in mind. Never be too bearish, never be too bullish. But ultimately, I do think this thing will break down. So if we look here, we got consolidation, and then we got a move, right? And then we got what I would consider consolidation. We haven't necessarily broken out of the zone because what I'm looking for with Bitcoin to break out, and I think it will happen at some point, is I'm looking for a pop, right? And you're probably like, what do you mean a pop? So we got price resting above, right? So price is looking good here. I'm looking for Bitcoin to just come out any day and just be like this. As soon as Bitcoin does this, I'm going the opposite direction because Bitcoin's coming back to retest the lows. That's all that's happening. Nothing crazy. So I'm looking for the pop here. It could happen after this candle, right? Or this candle could reject below, but if this candle rejects below again, I'm looking for in the zone, right? For Bitcoin, I'm looking for M, which will break down, and I'm looking for a reversal, right? So those are the two scenarios I'm looking for right now. So they're both, in a sense, long positions, or short then long. But that's only if price maintains, right? If price breaks below structure, which means AKA breaks below this 21,000, so on and so forth. If price gets below this with the volume part of the candle, not the wicks, we discussed this many times, with the volume part of the candle, that's where I would look to step in and be like, all right, we're probably going to break down further. So that means we're going to get trapped back down in here. Does that mean we go deeper? Not necessarily. Right now, I'll be real with you. I'm not looking for deeper. I'm looking for a double bottom. That's what I'm looking for right now. I'm not going to look for deeper until deeper reveals itself. But if we come down and retest the lows, I'll buy back in again. I mean, I took this right up, right? I expect the pop, but I went in and took profit too. I'm not gonna lose out on my gains because of these kind of plays. So, we'll wait and see what happens. If we get this pop, And let's say structure keeps building. I know some of you are like, well, what if structure keeps building? Okay, I'll catch it on the retest. That's just how it is. I'm not scared about missing out on anything, because if I'm scared about missing out on something, that's called FOMO. If you're FOMOing, you're not going to make it very far in this market. I'll tell you that. You just got to be really careful with the way things are. Now, you know, price expectation for me ends here. Now, can it go higher? Sure. But I want you to understand that if you look at price from here, that's a hard resist, right? That's a heavy support, hard resist. If price pots back up to here, this is where I think they would take liquidity. And this is where if we're going to break a floor at any point in time in this chart, I would expect price to be here before it comes back and breaks the floor here. So don't be scared to play in the market, take DCA positions. We talked about it today in the group. You know, possible, you know, anywhere's in this zone. If price comes back down in here, you're good for a DCA. We talked about the pyramid strategy, right? One of the discussions we had in FS. Go over here, pyramid strategy. Basically, free alpha, by the way, free alpha. You create a pyramid, you find your support and resistances. And on those support and resistances, you just play out your moves, right? Does the price have to come down here? No. But we got to catch all the support and resistance because we got to know where we're DCAing. So if I'm looking for a long-term hodl, I'm looking to get in here, right? So I'm looking to get in on some moves. So when I get into this position, I'm holding it, right? Which is what I did. I bought this bottom. I actually bought a little bit higher though. I bought like right around here because I waited for the retest and I bought on the retest. And then when it retests again, I bought again. So I got my whole position in here. But I would kind of break it down like this, you know, from lower to higher percentages to the downside. So you come in here, you can do a 10% here, a 20% here, 30% there, and just keep dialing heavier and heavier the more price falls. This will give you a good upside when the market actually starts turning back up, right? So even if the market chops for a while, eventually the market will start moving. And then once the market starts moving, you'll be in a good position. But you don't want to be getting caught up in the chop, right? This is a lot of chop in here, so I'll be really careful. Yeah, no problem with it. I'll be really careful with this. Wouldn't be getting caught in the chop on this. I would definitely be trying to, you know, take my positions and take them lightly. Don't get too FOMO'd or anything like that. Don't hit your top. Don't be buying breakouts, guys. Like, just avoid breakouts, okay? I know a lot of people they like, oh, breakout trade. I can tell you breakout trades fail more often than they go through. Always confirmation. In my own perspective, are there breakout trades out there who are probably successful? Yes, there probably are. I'm not at all saying that breakout trades are horrible, but I would say as a new person, your emotions set in. So breakout trades end up wrecking you because you think the breakout trade's going to go through every time. And breakout trades in a downtrend is even harder to catch, right? So these are the things you have to be really careful with, I would say. All right, so that's kind of what we're looking at for Bitcoin. Again, get a nice little pump here. Price breaking above, holding here, right? I'd like to see, let's see. Where are we at? If we hold the top here, so I'm looking for this. Yeah, we're looking good. So it looks like price broke and it's holding above the zone, right? But again, I need a pop. I need a move. If Bitcoin's going to move, it's got to move. These little builds are not anything. Because when you're building long and little builds, eventually price will come back. It's showing that there's no price interest in these higher zones. You need to see the pop to really build price interest. Yeah, I mean, for Bitcoin, that's what I got. I would say longs. I mean, look at this, guys. Look at this. If you look over here, 2021, these were our highs, like our high highs, right? And then you got your May, June, July, August, September, November, December. It comes back, right? Look what months. Look at where we're at. We have so many longs in the market right now. You have to be really careful with this. Do I have any vices? No, I kind of quit all my vices, to be honest with you. Do I gamble sometimes in crypto? Sure. I throw money at stuff that I don't know if it'll actually succeed. You know, that's part of the game when you're making good profits. But yeah, I mean, if you're investing it and it's affecting your investments, I would say, maybe cut it. But at the end of the day, this is the money you earned, right? And if you lose the money you earned, you're not going to get that back. You got one life to live it too. So I'd be careful with that. With, living your life and stuff like that. But overall, we got basically 3 steps on the longs. Longs look ridiculous right now. I can tell you this. I think the market's scared to long any further because they've been here for solid weeks with no movement, right? No movement to the upside. They're just kind of slowly wheedling down. Longs are getting scared. They're getting scared. This is not a good sign for me. I don't want longs to get scared if we're going to keep pushing. I want longs to, go if they're going to go. This is a long period of consolidation of scaredness. And this has been happening since June, pretty much, right? So I would say a lot of this is just, longs trying to cover their positions. They're not necessarily getting liquidated, but they're just pushing their positions higher or even shorts, right? So longs, sorry. Longs are basically holding on to their positions. So they probably pushed their positions. That's how they got this high, right? So they probably pushed their positions on these shorts. So somebody probably longed up here, maybe longed over here. Think a price would hold about 30K. Then this move down is essentially this move up in longs, right? So they had to cover their position hugely. And that's basically why they're trying to push price back to their zone. So if they get price back to their zone, you should see, in my eyes, they should see the market or the long market on Bitcoin pull back. That would be a good thing. I think the long market needs a pullback, and that's why I'm kind of not too optimistic, I would say, for upside. But again, I'm market neutral. I'm looking at both sides of the coin here, and that's what's going to keep me, I think, really level-headed. So looking at Bitcoin here, like on the long side, that's a little scary. Come over here, we look at BTCD. So BTCD is almost back at its bottom. Like, I'm really surprised. I thought it was going to break out here. I was expecting a breakout from this position, or at least this position, but it just keeps dropping. So Bitcoin's losing more and more dominance, which is making it look weaker and weaker and weaker, right? At some point, Bitcoin has to move against the alts. So that means either the alts get destroyed or Bitcoin pumps hard. One of the two. Is that a FOMO comment? Sure, but don't take it as FOMO. Just understand what I'm saying. One of those two scenarios will happen. And if anything pumps hard in the current conditions of the market, with money being expensive to borrow, I expect it to always come back. Now, eventually there'll come a time around the halving, I think, where price will shift out and it just won't come back, just like it did previously, right? And that happens every single halving, but that happens at the halving. We're at least a year or two out from that, right? That's 2024. So me looking at the halving right now, not even a thing. We're still at the end of 2022. I think September might be a little bit of an issue. We'll see what happens there, but that is what it is for Bitcoin. Ethereum, lost for words, man. Lost for words on this one. Like, people are dogpiling into Ethereum. And you got, like, if you listen to me, you know what I say about crowded trades. I don't touch them. You can get in these crowded trades all you want. I'm not touching it. Ethereum go to 5,000. Do I care? No, it's 1880. What am I going to get in profit? A 2x? Completely pointless, in my opinion. I don't even know why people even bother. Like, it's just like a drive. Buy Ethereum, buy Ethereum, buy Ethereum. It's like, you're going to get a 2x if it reaches all-time high. That's it. 2.1, we'll say, right? There's the incentive here for me is not there. Price has already kind of retested its highs. Now, I will say this for Ethereum. Ethereum is above what I would consider, kind of a resistance. And it did get above the order block here, which is huge. That's huge. So we'd say that right there, that white candle that I just incorporated, that's your order block. Price is now above that. It was rejecting on it, fell back and came above it. So that, in the current move, I would say it's kind of bullish. Oh, A lot of practice, man. A lot of practice. I lost a lot of money too. You know, like, I mean, I gain money now, but like, I lost a lot of money learning. So it just took a long time for me to kind of understand the way the charts move. And you just kind of come to earth and be like, all right, um, you know, we got to look at things like momentum in a sense, right? So I would say like, if I'm looking at things like momentum, I would be looking at things more in the perspective of Newton's law. Is something I bring up a lot, right? What goes up must come down. Inertia, force, so on and so forth. These are things that even work in the charts. So when price does an action, price then does a reaction. Then price does an action, then price does a reaction. Then price does an action, then price does a reaction. And the ball keeps hitting its previous bounce zone, right? So this bounce could create a 50% move, right? If you think about it from inertia, the way force would hit the ground, it would bounce. It would not have 100% of the same move that it had coming down. It might have 50% of the move. It just depends on the force that it had when it came down. So that means that this bounce could go up 50% of the drop, which if we are looking for 50%, it'd be around 2081. These kind of rallies, they happen regular. And that's what people, they just don't get it, you know? They're like, and I'm not saying like people should immediately, because I think it takes time, but you know, here's your drop right here, right? Look at the move. That's more than 50% of the move. Look, I'll put up a fib to show you. So that's your fib. If you look at price, your 50% was 727 here. Price came all the way up and retested the 382 for Ethereum on this move. I think this is what is currently happening to Ethereum right now. This area right here. And then if we look over here, so there's still some upside, but this is going to be a dangerous move. Look at the move here and look at the move here. Did they not look similar? I'd say they look pretty similar. If we look here and we do a fib again, same thing, right? Drop it to the bottom here. Where's our 50%? Right here. If we went up to the 382, where would we be? $2,500 ETH again. But then from that $2,500 ETH, what happened? Well, from here, you lost another 90%. Now, not saying ETH will come back necessarily 90%, but I think there's some solid support lines that we shouldn't ignore in the chart, right? One of those would be right in here. And another one being right in here. And you're probably like, well, that would be insane. Why would it come down that far? Because no matter what anybody says, I don't believe ETH is going to outpace Bitcoin. I just don't. And that's due to liquidity, right? Liquidity is everything. So if you understand liquidity, you'll understand that. And so if I were to take this and I were to reverse this fib, right? From here to here, what do we see right there? That's what we call our golden pocket, right? That's our golden pocket to the upside. So if that's our golden pocket to the upside, then price might be able to even reach that, which is 26,000, 25,000, or not 25, $2,600, $2,500 ETH from a Fibonacci, right? But right now, I'm not worried about that because that creates hopium. That's why I typically don't pull out the fib, because people are like, oh man, there's still a lot of room to run. But we have to look at support and resistance, right? I would say this is a solid resistance here. And we're starting to get above it. But at the same time, we've gotten above it before and fallen back below. Gotten above it before and fallen back below. So we will get a decent pullback at some point for ETH, where ETH's going to come back pretty nicely, I would say. So if you are looking for an entry in ETH, I would wait for a good pullback, because I think there could be a 32% drop on ETH, coming before it ends up moving any higher. If you look at any, and I'm not trying to use indicators because indicators confuse people, then people believe in indicators and they think that that's the way to do these plays. No, indicators are not. Candlesticks will tell you everything. Support and resistance will tell you everything. But I use these as kind of like a verification against my move. We can see right here, price is what? It's in the overbought zone, right? And then on top of that, it's losing strength. Now, we did pick up right here, right? But that pickup could end up rejecting right back here on the 70, and we could just continue to keep hitting our head on the ceiling. It's overbought. ETH is very, very, very much overbought. If we look over here at the stochastic, same thing. Stochastic showing ETH extremely overbought, right? The stochastic doesn't follow the RSI specifically. The stochastic can play against whatever the RSI is saying. For instance, right here, see how high the stochastic peaked? It's telling you, hey, we're starting to get overbought again, even though we're all the way down here. That's why the stochastic is a good balance to kind of help you offset your biases with the RSI. These two are like brother and sister. I would utilize these against, I use these all the time against each other. Great indicators for telling you where things are. Daily wise, stochastic says no. We look on here on the weekly, stochastic says we're under the 50, right, by the orange line. If we look on here on the monthly says we're just bouncing out of the bottom. So we could definitely boom, boom, boom for a little while and kind of keep bouncing around down here. But I mean, outside of that, like ETH isn't a play for me. We look here on the monthly. Again, what are we going to? Right up to resistance. If I look at it from a monthly perspective, I would say price will probably come up and retest there. Right? So if price is going to come up and retest there, that's 22,663 from a monthly perspective. If I were to look at this from a weekly perspective, I would look for this OB right here, which is where price is already starting to penetrate into. And that's your swing low, right? So you got your move, your swing low, your swing high, and then your breakdown, right? So price is coming back to rebalance the swing low on the weekly. We look here on the monthly, swing low is right here. It's actually higher. All of that swing low, right, on the monthly. So this is your low point, and then price moves up, swing high, breakdown, price moves back probably into the swing low, and that would put us right where I was saying earlier, around that $2,800 range, right, on the monthly. So the daily and the monthly, I'd say kind of line up if we look at it, and then the weekly is kind of like the mid-range. So we could see price kind of push into this range, but ultimately I think there's going to be heavy rejection even if we go further. So OBs, hold on just a second. Let me clear this out real quick. So it depends on your time frame, right? For like the daily, for instance, like here, if I were to look for the OB here, it would be your last down before your move up. So you basically have an OB right here, right? Even though you have this down, that's not technically considered because it's still higher, right? This is your last down candle, and then it's the entire candle. You can go wick to wick. Really, I like to just encompass the body when I'm doing this because it makes it cleaner. Can price fall through? Yeah, it can, because we still have the wick. And you'll see here, price did what for this OB? Retest, and look how perfectly it bounced out the bottom here. See that? And then bounced up, came down, came up a little bit, and then took off. This is what we would call shifting out of the zone. So price bounced, and then shifted, right? Then price came down, and then shifted. Then price came down, and then shifted. So this is a building long structure, is what this is. The problem is there hasn't been enough pullback in this move, so it needs to cool down. So that could be a retrace, that could be whatever. But we need, on the RSI, we need price to come down to at least the 50, right? It doesn't have to come below the 50, but it needs to go down to at least the 50, cool down for a little bit, and then price can continue on. If the move is intended to be healthy, right? A healthy build to the upside will typically move in that fashion. So it's not just gonna go and shift and then go and shift and go. It's got to cool down and consolidate in the zone to kind of let the RSI cool down, right? The buying pressure if the buying pressure just keeps going and going and going and going and going, eventually a big player is going to step out, right? Then another big player is going to step out. Another one, that's going to cause a huge, huge drop. So if you think about it like that, if you're running a marathon, right, you have to take a break. You can't run a marathon all day. If you run a marathon all day, you'll probably die. And that's basically what happens when these charts drop. Is, you know, they're running a marathon, but they're not taking breaks. They're not drinking water. They just keep running and running and running and running until they run out of room and they just fall over. And that's what happened to a lot of these stocks and stuff, including crypto. Same thing. A lot of them just kept running and just, you know, eventually just popped. Come over here. Look at ADA. So this is really my expectations for ADA. Now, keep in mind, ADA could do one of these first. So my expectations is ADA is going to drop. And that's because This pennant right here is a bearish pennant. Now, does it have to 100% play out? No. Here's another scenario I've been thinking about. So price could do this, consolidate, rip up, but then will still come down, right? So I would watch out for ADA. We could see ADA make a big pop. And then when ADA makes that big move, and that's what I'm telling you guys with the big pop. I'm expecting Bitcoin to make a big move, and I think a lot of these will follow and make a big move right behind Bitcoin. And that'll be a good opportunity to get out or take profit if you're in, right? And then once they move up, then you can go ahead and take your leave and then wait for price to kind of reject and come back down and cool down. In this type of move with this kind of bearish pennant, I would just be oh, thanks, appreciate it. I would just be careful because like price could do this, but ultimately the goal for a bearish pennant is to come down. So I'm looking for the next price zone. Two next price zones for ADA for me are 26 cents and 15 cents. So there is still bullish sides to the market, right? The market still has legs. It's not dead. And that's what I think a lot of people gather from my tweets is that they think I'm just like bearish on the market, but it's like I see the legs. I'm not saying that. I'm just saying be cautious if you're thinking like long term, because a lot of this isn't looking too healthy. Matic, I've called out the zone for a long time here on Matic. We got the hard resist right here. Really hard resist. It's just been sitting there hitting its head. I mean, really, I would consider this a 3-tap. For me, it's a 3-tap. I'm out. I'm looking for price on Matic to really break down. The Disney thing got Matic way overhyped. And let's look at the RSI here. Yeah, RSI is kind of matching what I'm saying. So if we look here, RSI is declining. That's declining strength. You got Matic just trying to break through. So eventually, this is what we call bearish divergence. Price moving up, and then strength moving down. Right here, the stochastics kind of showing almost identical to the RSI. That's not a good thing. And you can see right here on the momentum waves, these blue waves right here on the Fu Manchu. That's what this indicator is called, Fu Manchu. We're starting to lose volume. Volume's starting to die off for Matic. So I'd be really careful with Matic. I think definitely something to be careful with right now. Solana, I mean, you could be looking for a short. I'm saying. You see us playing that zone. Solana, again, another one of those bearish pennants I'm looking for. Now, we got price dropping in, building up, and I'm expecting price to break down. But with this price breakdown, here's the thing for Solana. Solana, just like I showed you how ADA might come up and come down, I think Solana might do this. Solana might pop down and then move off the bottom, right? So this could end up being a double bottom for Solana. And if this ends up being a double bottom for Solana, Solana will moon from this, right? We can see Solana push up and probably pushing these upper zones right here. That's what I'm looking for. I'm looking for the move to shift down and to the shift up, and then Solana just goes, right? And Solana rips up to like $70, $80. We could honestly, I'll be real with you, we could be looking at an altcoin season right now. And Ethereum is just leading the charge. And a lot of people are ignoring that. So, you know, it's definitely a possibility right now. If we look at our RSI, we look at our stochastic, they're pretty much market neutral, right? So the RSI, I mean, I'm not liking the way it's squiggling too much, but it's in the middle. It's above the 50. To me, that means that it has legs. If it has legs, it can go, right? So, I mean, we could see it build and try, but as soon as you get up in this zone, I would get out, right? As soon as the RSI started breaking up there. So on the daily, if you start getting up there, that I would be out. But I'm expecting that if they break down, they'll be back at the bottom of the RSI, back at the bottom of the stochastic. And then what'll happen is the move will be able to moon from that. That'll be a big move for them. So that's my expectation. Like I was thinking Solana was really going to break down, but like that could happen even later, right? But right now, you know, it's looking like a down into an up. It's looking like a W to me. So I'm expecting price to come back and then come back up. Google, the Googs. Google's been kind of head hitting here. It's not really doing a lot. Did get above resistance and found support. I'm just wondering if it will hold that. This is the hard resistance for Google. So if it can hold this, we could see Google try and retest higher. I don't know about all-time high, but you know, we have some resistances in the way. Maybe like right around here, B1. and then maybe right there. Yeah, that looks good. So you got your resistances right here, supports right over here. So these two be kind of the two zones I'd be looking for Google, and you're probably like, you know, what time frame? I'm using the weekly here because it breaks it up a lot better. If you use a daily, you can use that, but you got all these gaps. Looks nasty, so I try to clean it up by making it a bigger time frame. Stocks move a lot slower anyways, so you don't necessarily have to really worry about getting into what's it called. You don't have to worry about trying to move on them too quickly. All right, so moving into Disney. So Disney, I've had this drawn out. If you guys paid attention to my Twitter, pointed this out numerous times. Disney's coming off the floor, but stochastic looks way too hot for me. So even though we got, you know, some room, some overhead on the RSI, we're under the 50. That's bearish. Stochastic starting to move into the overbought zone, so it's telling me we'll probably catch rejection around this resistance right here. So right around 115. I'm expecting Disney to come back down to like $91 again, if not deeper. Doesn't look too attractive as a stock. Amazon, and some of you guys may trade stocks, some of you may not. I just like to cover all these because they kind of give us a good overview of the market. Amazon looks overbought on the stochastic. Looks good on the RSI because we're over the 50. You kind of got a double bottom on volume. Actually, it's declining volume. Whenever this volume goes down further than this volume, that means that we're getting deeper sells, right? So it means even if price action is looking positive, it may end up being negative. This pop right here looks like a reactionary bounce, so I'd be careful with that one for sure. All right, moving into, yeah, I wouldn't touch Amazon where it's sitting at right now. It's hitting my resistance I have drawn right here. You can see right here, support, support, support. I'm showing you guys how to identify this. You got your OB right here, right? Your order block, and they came back up and retested it. So they hit it, and now I'm expecting a pullback. For Amazon, I'd like to see this. This is ideally what I'd like to see. I'd like to see Amazon come back and find support here. Maybe consolidate a little bit. RSI cools off, stochastic cools off, and then it can move to the next zone, which would be like right in here. So right around 160, if it can get down in there. So just some ideas for calls and puts if you guys like long and shorting. That's your way to long and short pretty much in the stock market. Moving into Lucid. So this is what I'm really optimistic about. I really like this one. Price zone is really solid. You can play the toss and bottoms of this one easily. Look at this. It's trapped. It's literally this. I get excited every time I see this one. You can buy here, sell here, buy here, sell here, buy here, sell here. It's the easiest one to play right now. So if you got a large amount of capital, this could be the move right here. You know, just get in at the lows and then get out at the highs because it's not going anywhere out of this, so it's stuck. It's a newer EV company. So for you who don't know, EV is electric vehicle. That's what when they say EV and stuff like that, that's what they mean. So it's a newer EV company, so it might take it a while to get out of this rut, to be honest with you. But it's good for playing the highs and the lows right now. I think a lot of traders are actually doing that, so that's why it's kind of trapped in the zone. Adobe, another one I like. I try to stick to the basics. If you guys have other ones you want me to look at, I can look at them. OP, yeah, I'll check out OP and just right after Adobe, I'll check it out. No problem. All right, so Adobe still kind of hitting that resistance. So I was watching this order block right here, last down before the last up, and really they're kind of just headwinding against this order block right here. They're not really moving on it, which is interesting, right? Not sure why they're not interested in moving through that zone, but it looks like they tried to poke it, but they did the same thing over here before they fell. So we could see price rejecting this zone. This is a good zone to be watching for Adobe because I'm looking for Adobe to keep falling. I'll be real. Like, could be wrong, but like I don't see Adobe bouncing off of this. it broke support, right? So I don't see this move as real. It's got to come down to support and find support. And you're probably like, well, what is this support? This support is right through here, right? So it's this whole zone right through here. And this is our last OB down here. So I think that they'll try and retest that OB right here. And then we could see price from there start to move for Adobe in the positive direction. Now, some of these are like way down, right? Like Adobe here was 50% down from all-time highs. If Adobe reaches that bottom there, like I'd like to see, the way price action is building against it, it'd be 57.86. I'll buy some here though. I'll buy some here. That's set around 294.87. So 295 basically. Buy it 295. You said OP? Hold on 1 second. Let's open this up. Let's go here. OP. Ocean Pal, is that correct? Yeah, no, maybe. I have AMC on here too. I'll grab that one next. This might take a while. I think the stream's lagging a little bit. All right, we'll come back to that. I think. Oh, OP. Okay, got you right here. You want to look at this one? All right, got it. Never mind. I know which one it is. Yeah, Optimism. All right, so the thing is with Optimism, there's not a lot of price history, man. You got to break this one down to a lower time frame because it doesn't have any history. I mean, this looks good. Like the breakout here, like the fact that they were able to get out of this rut looks really good. I thought they were going to get wrecked. I really did. Optimism just fell through a floor, and I was like, "Oh, this thing's done," because it was a new token. 49 cents, $1.69. Way overbought in this zone. Cooling down. It might have one more laid down because the RSI I think is going to come down to the 50, and the stochastic will probably come down to the 20. Right, so that it's got positive price action if that happens on the daily. Right. What that'll probably do is that'd probably bring price down to, let's see what we have here. So we have our move here. That's kind of where we found support. Man, there's just not a lot of price action to go off of here. It could go deeper. So this is, yeah, I don't know if they bring because they brought it back down here. That'd be extremely bad. But this one looks good. They need to keep building price to the upside though. That's the issue right now with OP. It looks like an ABC kind of. So just so you guys know what an ABC looks like, it's you get price coming into an area, your A into your B, and then your C ends up higher, right? So that's kind of like a swing high, and then it usually ends up coming back pretty hard from that. So we could see price come back here. Could see it come back to here and consolidate. But by the RSI, as long as you stay above the 50, I think price should remain above this $1.37. If you start breaking below the 50, I can see price coming all the way back and recapturing this old order block right around 70 to 67 cents. That's what I would look for. So kind of these two zones, so this zone and this zone would be the ones I'd be watching for. If price comes below here, though, what I would look for specifically, so I knew that it wasn't a fake out, is I'd look for price to break down dramatically, probably bounce somewhere, like right in here, based off of this hold right here, come back up, retest the high, and then reject, and then that would be your shakeout, right? And then this right here would turn into probably a head and shoulders to the upside, and then you would see price build again. If it remains bullish, right? That's what I would look for if it remains bullish. Again, this is all speculation because there's not a lot to work with off of this, but that's what I would look for if it were bullish momentum. But you just got to watch your floors, set your stops, right? So if I were looking to get stopped out on this one, I would say if price gets below 120, 112, so comes up, rejects, I would take a stop here, and then I would wait for price to come down to this order block. And yeah, patience is key with these things. If you guys don't have patience, you won't be able to get in and out. And then wait for price to come back, and it will come back to here if it does break here. If it breaks down into here, it will come back to here, and you'll be able to pick it up for like 68 cents, 67 cents, and then you can ride it back up. Because I think price will hold here, because this right here, to me, if it comes back, right? Again, this is a if it comes back. It could stay up here. But if it comes back, that's a consolidation zone for me. You got a double bottom, a really clean one, right? That's a clean double into a push. So, but this push is pretty big, so they could come back to the zone, revisit, and then take off. Does that make sense? Yeah, it's a new one, man. It's the new ones are always tough. AMC. All right, let me throw up AMC real quick. I know I had it up today. I don't know where I put it. We'll just open a new one. It's fine. Again, this is for your worst case scenario, right? Otherwise, you're looking for a price to hold above the current zone. I know I had AMC on here. So I got a lot of charts. There it is. Yeesh. So many gaps. So AMC is doing one of these, right? This is not a ride you want to stay on, ultimately, but let's see. What did we gain here? Last one did 163% from the low. We'll count the lows here. Current one's at 98%. I mean, you could see more upside still. It's just if you're buying here, you're kind of buying, you know, what I would consider the top. Even if they press back up, you're still looking at hard resist right around in here, right? So that's like your heavy resistance, I would say, for AMC. And you can see right here, look at it, I didn't even see this part of the chart. You got a support right there, verifying that this will be hard resist, right? Not only do you have hard resist right there, you got a clean downtrend, right? And you're right now pressing resistance on that downtrend. So it's kind of a double whammy in the current zone it's at. If I were in this, I'd take profit, basically. That's what I'm saying. I'm supposed to be glued to the screen. Oh, man. Do Hex? All right. Let me throw up Hex. Give me a second. Yeah, so that would be my play on AMC. I wouldn't be too optimistic on the current move. Man, there's so much liquidity in that one, man. It's crazy how they got, because here's the thing. A lot of people think this was pushed by retail. No, I guarantee hedge funds saw the liquidity coming in, and then those hedge funds then played on it too. There's hedge funds trapped in this thing too. It's not just retail. All right, let's grab Hex real quick. I'm not gonna lie, like Hex is, man. Look, I like Hex, man. Not gonna lie. Scam or not, I don't know if it is or isn't, but you know, I think it's got a good following. You're kind of hitting resistance right there, I'd say. You can see it right over here. You're kind of hitting it right here. There's not a lot above that. Like if it gets above that. So if it gets above 623, yeah, just go with that. 623, I'd expect price to come back up and retest the high here around almost 12 cents. That'd be nice 2x if it gets above there. Let's see what the RSI. Oh no, that's not going any further than that. RSI way over. I mean, they could try and shove it, but ultimately, like this will be the top for this move right now. It needs a cool down. At least come back to the 50. Stochastics reading the same as that thing. You got heavy money for, like, this is like an up running mountain. Like if you're running up a mountain, you're gonna eventually run out of breath, right? Because you're gonna get tired. So that's essentially what they're doing right now. They got too much money trying to pile in at once. That's the problem with crowded trade. Like crowded trades, they get so much money trying to push in, and everybody's trying to force their way in. And then what ends up happening is they end up getting wrecked. We got AVAX there. Yeah, I'll throw up AVAX. If I miss any, just repost, guys, and I'll try and get to it. Yeah, so you got solid resistance, right? You got support right here, solid resistance right there. Good support over here, or good resistance over here. Price tried to come back and find support. It did find support off of the previous high, right? So from here to here, and then took off. So these I like to call these shifts, right? So like you establish a zone, essentially. So you're kind of playing a zone to the ups and the downs. So you're kind of playing the zone, and then you get a shift, right? Shifts are big moves. And then from that shift, you play the next zone. This is how bullish momentum works. And then you get a shift, right? Then you play the next zone. Then you get a shift. Then you play the next zone. Then you get a shift. And it just keeps going. And this is how bull markets are made. But bear markets are made the same way, right? You get the move, you get the shift, and then you get a little bit of play, and then you get the shift, and then you get a little bit of play, and then you get the shift, and that's what's happening over here. It's the exact opposite. Let me throw up AVAX real quick, and I'll get QNT. AVAX. Let's go up here. All right, yeah, AVAX looking. Oh, so many missed plays. Oh, feeling bad. I was expecting Price to come back here. I still do. I still think they come back and recapture this W here. You got a big old W right there. Look at that. And then continue to push through. And then you get the M signaling the down. And then the play. And then the M plays out, right? And I'm expecting this M to eventually play out fully, just like the W played out fully here. And it could even overreact, just like we got the overreaction on the W here. We could get an overreaction to the downside over here. And that would rebalance this overreaction to this overreaction. And then we can see price come all the way down here. That's why I was kind of watching AVAX, because like with all those liquidity issues with right now in the space, like we could see one of these bigger players get wrecked. But for right now, this is the support I'd be watching. Resistance wise, like, man, you still got room. Still got room on AVAX in my opinion. I don't know about a lot of room. Let's see here. Kind of what I'd be looking for on AVAX. And that's only if Bitcoin holds and stuff like that, right? We're already in the middle of this consolidation, so it's not like this is resisting right now. Let's see here. Let's kind of draw that across and see what that looks like. Yeah, you're kind of like at that 50 for the consolidation over here. So if we were to take like a fib and run it across, then you catch that 50 right up here. Actually, no, you're further along. You're actually good. You're still well under the 50. Yeah, I would say at least to this, probably 38, 33. It looks to be building well, man. This one looks like it's doing as well as ETH is, to be honest with you. What's the upside on this? 120%. Yeah, it's doing just as good as ETH. I'd say ETH's probably doing a little bit better, but that one looks good. Yeah, this one I'd be looking for something that's not quite here yet, right? Like if I'm looking to get into something, like this one's kind of already moving. A lot of things did. This is a good one right here, right? This is what I've been watching. I'm giving you guys some free alpha here. KDA, RSI overextended like crazy, but look at the zone. Look at the zone. See how it hasn't moved out of the zone yet? This is what we like to call consolidation, right? This is a really solid consolidation, I'd say. So this is what I've been watching for a while. I'm dabbling a little bit at the lows, but I think this one might move. All right, let's go to QNT real quick. Yeah, there's not a lot of I can give you as far as like outlook here. We're kind of hitting a resistance, and then we do have some room up here, but like it's kind of a I don't like to tell people unsafe plays. It doesn't look too safe. 3690. And you got your RSI way over peaking. QRS. Again, don't lean on the RSI too much. It's just an extra indicator I use when I'm looking at price and I'm seeing resistances, just to kind of, you know, hedge my thoughts more or less. Yeah, cute. How did I know they were gonna push all the way to hell back up here? That's crazy. Oh man, let's see this. Hold on. Yeah, that honestly that could be the bottom for QNT, I'm not gonna lie. Do I think price will probably come back? Sure, but like this, look at the consolidation over here. Like, I don't know if price can really get into the zone. There's just so much money there, so much support. We got this big drop down. They already dove into it a little bit, right? So, you know, price it's already gone. Like if you're looking to get in QNT, it's already gone. I'll put it that way. Like if you're in it, sure, you have some upside, but if you're not in it, I would not buy it where it's sitting. I think QNT will probably get up to 152, roughly, before it stops. That's going to be a hard support / hard resist for QNT. You can see right here, double tap to the top, almost reaching it now, and it should come up here, and I would think that we'll get a hard rejection off of that. Let's see. PLS and PLSX. Let me check. I think KDA is a safe play right now. I definitely think KDA is a safer play. Safer play. I don't know what's safe in the space with all the liquidity issues, but safer play the way liquidity is moving in it. ADA, you could see another 50% drop on ADA, but I think it's in a good consolidation zone too. But it doesn't move; it moves like a snail. PLS. Maybe I have it on here. Let's see. Show my YouTube charts. OP. Maybe I don't. All right, let's check it out. Let's add it. PLS. Stock or crypto? I'll assume you're talking about crypto. Oh, PulseX. They aren't out yet. Invested it. Oh, gotcha. Yeah, PulseX. I don't know if there's a chart for that, man. They're in a chart. I got some Pulse, but like, I'm not gonna invest anymore, right? If I don't have a chart. Yeah, I'm not seeing anything to be able to, and I'm assuming that they you can't buy them anywhere other than through that. Oh, it's not out. Yeah. Let's see. Yeah, I do have some Pulse X though. I didn't put a lot of money. I only put like a couple $100, but like at the end of the day, if I lose it, I lose it. Again, remember when I said I do some gambling? That was some of my gambling. Essentially, it's kind of a gamble on a whim. I think Hex at its current price isn't bad either. Right, that's another one. I think a lot of people are giving up on a lot of these that I think will do well. Richard Hart's is a good talker, man. Talk you into buying your own house from him. So, you got those kind of guys out there that can drive liquidity based off of that. You got to understand that there's certain people out there that can do those type of things. Let's see. Man, I really would have liked to see Hex go under a penny though. Not saying that negatively towards Hex. It's where I would have liked to have gotten in. I don't really like buying these riskier plays at higher positions. And this isn't like super high, but it's like it's at the top of the move, so it's kind of hard to really want to get into that. Near. Yeah. Oh, dot. Hold on. Let me grab. Oh, graph. Let me grab graph because that was up there first. EFG. I don't think it's GRT. I thought I had graph. Oh, it is GRT. Okay. They got a longer chart. Let me try and find a good chart on this. We'll do USD. No, I don't want USDC. We'll just go with KuCoin. I know their charts are usually a little bit manipulated, but it's fine. Graph kind of breaking above resistance here. I would say that's your resistance. You got your okay, never mind. So you got your OB right here. So you do have another one right here, but I would be looking at this one. And price hasn't quite broken out of it yet. So we could be seeing it as resistance, as you can see right here. So again, I look at volume body versus wicks. You could be like, oh, well, the wick poked out. You want volume to really show the strength. But I will say this swing low right here, see how price is sitting on top of it? That's positive, right? So we could see it. I'll put it like this. If Bitcoin does its pop that I'm looking for, I could see graph following. And I would look for a high. If Bitcoin does a big move, I would look for a high of right around here. I'd get out around 20 cents. So you get like probably like a 70% return from current price, right? Something like that. Nope, 40. My bad. 40%. I thought it'd be more. Let's see here. Let's get dot. Let's throw dot up. Yeah, that's what I'm watching, man. That one I want to get a lot of. I do have some, but like I want to get a lot more dot. Oh, and I call this one too. Look, I already had it drawn out and everything. It already hit its resistance, broke through its resistance, and now it's moving off of its resistance. That's gonna keep going. So let's see what the RSI looks like. Yeah, we still have room. We still have a little bit of room. Stochastic saying overbought. RSI showed a little bit more room. We could see dot pop. Key zones to watch would be 1080 and 1189. Those would be kind of the zones I'd be watching for. This would be like top of zone. I'd take a sell here because I would expect price to come up. It'll reject just like it did here, and if it swings again, you can get back in. But I wouldn't expect that it'll be able to with the way the RSI is sitting and the stochastic. Everything right now is way overbought. So everything went from being super oversold to like these little moves creating just such an overbought market right now. Just people flooding in on opium. Let's see. Near. All right, let me grab this. It is 10:28 my time. Yeah, I'm gonna do more of these. I'm gonna try and do at least one or two of these a week. Get people out there in the community, help them out and stuff like that, and hopefully people are able to make some money. Right, near. Oh, what a move. Might be some gas still left in the tank. I'll be watching this zone right here. That's kind of like a support resistance zone, right? So, and you can see price did poke through here. So you could even see it like come up a little bit. So maybe like all the way up to there. So, I mean, expectations for near maybe $7, $7.10, something like that. That would be, and that's just drawn at one line, right? Like everything looks good though. Like the thing is with near is you got your low, right? And then you got this pullback, but really it's a higher low. So structure for near is still good to the upside on a macro scale. On a micro scale, it might be overbought, right? But on a macro scale, we have good support on higher lows. So, I mean, near looks not too bad, really, to be honest with you. You got the big M right here, right? The M played. Now, could the M go deeper? Sure. That would be a double bottom. Still not super bearish. So price could come out and come back down and revisit the lows here and then take off. So if it rejects here, right, we could see that, or it can just keep continuing building. So those would be kind of the two scenarios. From a macro scale, this would be something I'd watch out for. From a micro scale, we can still see building on near, but like near's at its peak. Like I would wait for a pullback if I were looking to get into this before I'd jump on that. And I think ultimately that will veer down and then somewhere's where it's at right now, come back up, hit an M, and then come back down, and then start reversing if it's going to find support here. Zill, let me check it out. Yeah, long-term scales, like deer looks really good long-term. Like I like the structure. The structure looks really good for deer. USTUVWXYZ. Still USD. This structure is a little bit different because you had this big fall off, right? Like if you looked at this and you looked at near, they're complete opposites. You got this big fall off, then you got the big move, then you got this big fall off. But to me, this looks like a decline wedge in a sense, right? You got price moving down. You got, let's try and draw the shape, see what's going on here. Oh, we could even call it a widening wedge. Yeah, I mean, price can come down, but it's not going to come down much if it does. I think it has more upside than downside. Like if you're to take a risk to reward on this, I mean, definitely try to catch the lows if you guys can catch them, but like on a risk to reward scenario, your risk is minimal. For prices right now, where price can go to, yeah, I'd say you got a really good odds on that one, the risk to reward. It's not too bad, I'd say, but again, if you want to wait for a lower position, it may fill that out, but all it's got to do is get one of these good spikes. Now this is, dang, this thing blew up in March. Huh. and then came back down. May, April, June with the market, and it could end up exploding back up again. I mean, it looks like a decline, and a decline is good. Like this is structure I can get behind, right? This is the kind of structure I look for. So like if you're looking for market upside, you want the mood to be moving down. Because if the move's moving down, it's with the intention to go the opposite direction, typically. So this one looks I like the macro structure of this, right? It had the drop right here, and what happened? Boom. Huge returns. Look at that. What is that? 10,000, almost 10,000%. And now you got the structure building again for the same move, it looks like. Do I know how long it'll play out? No. I mean, it could just keep playing down and then eventually just break out at some point for another 10,000% move. Not trying to give you guys hopium or anything like that or hype you up, but like, you know, I like the way it builds and then breaks out, and it looks like it's building the same thing here. Now, keep in mind that this took a long time before it actually popped. We got, was it 800 some days, 802? And then over here, we've been in a downtrend for 476. So if price follows the same price action, you could end up stuck in this for another 400 days, another year. But ultimately, its goal is to explode. So it doesn't look bad from a larger standpoint. Can you do quick on Dookie coin investment of CLV? You want me to look up CLV, or I don't know which one that is. Like CLV USDT? Yeah. Well, I work with Alex in his fundamental group, so I coach a lot of people in there and teach them how to do TA and stuff like that. We're constructing right now kind of a better course in a sense, and we're gonna be sharing that out with the group and everything. But I mean, you guys, I mean, I'm not at all trying to like tell you guys that you have to join that. Like, I'm gonna try and come on here regularly and provide free alpha. It's just, you know, that's where I'm at most of the time, I would say. All right, so Clover Finance. Oh, heart dropped when I saw this chart, man. Let's see what the even the RSI says no. Not bad on the stochastic. RSI still has some room to run, but this thing looks like a mess. Got the drop into the move. You're kind of consolidating. I'd say it's consolidating, right? I don't know if it'll move out of the zone though. Like the highest pop I could probably see, like I think it's already tested its low there, see? And then you got the OB right here on the swing low, right? So they can still test that liquidity. It looks like they did multiple times. Like there's just not a lot of upside on this. Let's see what the if it can break up to this top, let's just see what it'd be. 34%. Yeah, I mean, if it can get back up to these highs, which I think a lot of coins are in that position, they can get to these highs. I don't know if all of them will. If it can get back up to these highs, then you know it might be a good play. You know, you might get almost what you got, 16 cents, 11 cents. You know, about what is that? About 40% return or something like that, roughly. Let me measure it real quick. 33, 34. Yeah, about 34% return. Yeah, I mean, you could see, you know, roughly a 34% return, possibly. We'll see what happens there at the end of the day. But I think there's better picks out there than this one. If I were you, I would I would be careful with this one. If you're looking to invest in it, of course. Like again, ultimately it's up to you, but you know, that's just me. We see right here. What is this one? Oh, CRV. So this right here is CRV. So CRV actually closed above what I consider resistance. So / support. And you can see it right through here. So that was a really good support zone for CRV originally. And we look like we're sitting right on it pretty much. So definitely something to watch. We could end up kind of pulling back under anyways. We still have a while. This is on the weekly right here. We still have a while to play out because you can see right here we broke out before, but we still fell back under. We could do it again. And it might just be a retest of the bear flag too. You can see the clear bear flag that's going on here. So these tend to come break down and then retest and then come back down. But I would expect it to break down further before it'll try and swing back up for a real retest. I wouldn't take this as the retest because I think the price will end up retesting here and then just coming back down and then retesting again and then coming back down again and breaking down further. Now this one, like my position I would take on this is I would just look for the double bottom, right? I don't want to be too optimistic on a lot of these because the markets aren't too healthy right now. I think a lot of people are just FOMOing. Hedron, just heck of it. It's only a couple months old. Hedron. Is that a crypto or a stock? There's some good stocks out there too, guys. Don't get blinded by just crypto. Just say it. All right. Hedron USD. I mean, we got some liquidity pools here, but we can try and look at them. Oof. Yeah. FOMO is feeding that one hard. That's a crowded trade. Look at the RSI. I don't know if I'd RSI is saying we should have stopped this bust a long time ago. Some of these just get that FOMO, man. They just keep rolling. So I mean, I can see the same, potentially maybe even testing all-time high, but you'll get some bumps in the road on the way up. But I don't know if it's worth the trade because you're at the high end of the range. You got to look at it like this, like from your 50, right? How much higher are you than your 50? You're already well above your 50. You already hit your golden pocket. Like there might be some upside left, but at the end of the day, like this is too much risk to reward, right? So this is your reward. All of this is your risk. So glad you didn't short. What got I just got good at trading, man. Like, making good trades and being able to help other people out at the same time, and I'm able to afford to do this now, so that kind of really helps. And then Alex bringing me on too really helped me a lot, so that helped me also fund this. So now I can do it full time. That's basically it. That's why you're seeing more videos from me. That's why I'm trying to post every night for you guys. Pop. USDC. Yeah, we got some Uniswap pulls here. Ooh. Man, what are you getting into? Yeah, that was. What is it? Is this a stable? Oh, that too. Yeah. Yeah. I don't know if I touch that. Really low trading volume. Look at this red. Like, this looks like a sell-off heaven. That's what it looks like. Oh, Clover goes pop. I was. You're good. Yeah. Clover looks similar to that one. I don't know. Clover's not too bad, I would say. This definitely looks better than this. All right. So now that I've seen this, I feel more optimistic about everything else. All right. Let's shoot into some more stuff real quick. We got the 2 year. 2 years. Hey, look. It's got that nice round top. Getting ready to take off again. Stochastics bouncing off the 50. I'm still looking for that 384. So Be careful, man. Bonds start going. That's going to be negative for assets. Tesla. This is the move. I've been calling it for weeks. Look, you got the rising ascending wedge into the what? Expanding wedge. Now, ultimately, this will break out, and I think it'll be a huge breakout. But I'm expecting Tesla to come all the way back down and retest these lows again. We'll see at the end of the day. Maybe they hold this bullish structure of higher lows, but you know the way it's moving, it looks really good to come back down and retest these bottoms. Tesla, or not Tesla, but Twitter. I don't like the stock. I'm not gonna lie. I mean, if we put it on the Heikinashi, it looks good, right? We got a solid build long structure, but at the same time, what I think this looks like to me is we're coming in this direction and we're moving, right? So when we come in this direction, oh man, I know the screen's lagging. When we come in this direction from the top, typically I'm looking for price to break down. So they might get a pop, right? Tesla might pop out and then tank. And I'm expecting them to revisit their lows. Twitter. That's what I think Twitter's going to do. I'm completely avoiding this stock right now. I don't think it's a good buy. It's kind of like at the mid-high of its range. Let's see here. Let's get it up. I mean, oil's still holding. Oil hasn't really broken down yet like everybody keeps saying it has. It's still holding its own, consolidating. It is under resistance though. You can see right here, all the support, but it's under resistance and it just came through it. That can always change, but ultimately, even if it pops, I think it will continue to break down though. BNB. I don't know what is driving this thing, but like the literal worst network out there, in my opinion. Pancake swap is ridiculous. All right, still in the bear flag. So still expecting price to break down, maybe get a double bottom around 210, and then hopefully hold there. But like, if you look at the liquidity from the macro, this thing should go way down at some point. But you know, I could be wrong. Look at his move. No pullbacks at all, just straight gas. Yeah, Tesla for sure. I've been on that one, man. It's an easy one to read, and just so many people ignore it because they're like, oh, so they're so bullish on it. It's like, dude, just chill with the bull bear. Just understand the price action. That's all it is. All right, Shopify is still consolidating. Again, just like I showed you with Lucid, tops and bottoms. Tops and bottoms. You can play this all day. Tops and bottoms. It's just trapped. $30 and $40. That's a 25% move up and down. All right, so Netflix about to hit my zone. I know I got some squigglies on here, but I'm expecting Netflix to swing down, swing up, hit my zone, and then come down and catch the low. It's done this previously, right here. Swung down, hit the low, came back up, hit the high, came back down deeper. That's what I'm looking for Netflix. It's basically an exact replica of this right here. All right, let's go into dollar. Dollar still consolidating in the zone. Still higher lows, still higher highs. Nothing's happened. Dollar's is not bearish as of yet. USD, Chinese yuan. Put this. Go with weekly. Let's see. Chinese yuan still falling against the dollar. All right, that's good. One still falling against the dollar. Sandstorm still following trend. Again, you know, you got your bull. This is what I consider a bull flag. You guys are looking for a bull flag. Look. Now this is not a crypto, this is stock. See that? See how structure is building down? Eventually this thing's gonna pop. And when it does, these bull flags go big. Like real big. What are some of my favorite L1s? I don't really have like I I mean, when I'm moving money around, I can tell you that chain wise, I like ETH. I don't like the fees. I like BNB. I don't like the network. So it's kind of like mixed emotions on everything, right? I haven't really played in Solana that much, but Solana consistently has downtime, and I don't like networks that shut down their own network. So because of that, Solana's not really on my list to look at. I like ADA. I don't like its speed. Uh, I would say that those are kind of my primaries, right? Those are ones that I've been spectating and looking at for layer ones. And then, obviously there's the layer twos. I like layer twos, but I don't like the difficulty of getting into a layer two. So if you look at those different kind of pros and cons, like you can utilize all of them. Do I think that any of them are better than the other one? No. I think they're all roughly kind of in the same boat. They just all have their own cons with their pros, right? So ADA has great fees, but slow network. BNB has great fees, but horrible network. It just it takes forever to get things to go through. Transactions are ridiculous, not ridiculous in price, but like it just it sells at the wrong times. I would say, like, anytime you want to sell, like, you get front run by bots and everything else on BNB. And then Ethereum's great network, doesn't really have a lot of congestion. It typically moves pretty quick, but it costs an arm and a leg to use. Like, I remember paying almost $500-600 per transaction last year, and I know people are saying, "Oh, they're going to solve that." Until they do, they haven't. So it's just speculation, right? Until they actually do. Please look at Metastyle. Yeah, sure. Let's go ahead and check that out. Metastyle. OKX. Oh, man. What are you getting yourself into? Looks like a bear flag though, but it's still building higher highs, higher lows. I mean, the thing is with me is, like, when I see a bear flag, man, I spot it, right? It's just like there, and then I can't get it out of my head once I see it. That's the problem. Yeah, you can see right here. You're just building long, building long, building long. Looks like you're losing momentum. You're building long, hitting your head right here on the stochastic. You got a reduction in volume here. You got to move back up in volume, but it's still lower than the previous. So it's kind of like you don't really know which direction this thing's heading. If we look at, but I do like the build. Like, it's solid, right? Like, if I were to look at it and not try to be biased towards the bear flag, I could come in and be like, all right, support, and then I could do it again, support, right? And if I were to look at it like this, that's clear higher highs. Higher lows, right? So you got your clear higher lows, and then on top of your higher lows, you're getting higher highs too. And if you look here, see how price in that zone was a hard resist? So it got above hard resist, and now it's stair stepping. Now, if I were to look at it like this, I would be like, oh, that's kind of bullish. But we're in a bear market, so I have to look at it from both directions. If we were in a bull market, I would say this thing's going to moon. But in a bear, I'm just like, all right, let's look at the move. Let's see what's going on with the move, and see if we can make a shape out of this. And this is the only shape I'm seeing is a bear flag. See how price is just building up the channel, going long, and typically when they're going long, their intention is to go short eventually. Now, does that mean that they're going to go way down? No, they could just, again, like we talked about before, double bottom. So that's what I would look for here, is I'd look for a double bottom. Now, keep in mind, if they double bottom, it's going to come back up, and it's going to do that, right? If they don't double bottom, at some point they'll retest. Maybe they're right here, come back up, swing a little bit higher. See it? Swing a little bit higher, and then finish out the end. So one of those two scenarios I'd be looking for with this one. Sub 20, yeah, you could see that. You could definitely see that, I would say. It is going to be hard to get it back below that 26, though. That's the thing. That 26 is like a solid consolidation zone. Same thing with Bitcoin, right? I think Bitcoin's in a similar situation, but I'm not being biased just based off that. I have to look at the bear flags too, right? Bitcoin's solid consolidation. Like to get it back below $21 is gonna be hard, or 21K. That's why I told you guys, like, if it breaks below 20, we could see it really start to tank from there. So definitely be careful. But yeah, I think we ran through a lot here. So we threw out some plays and stuff like that. Talked about some different things here as far as what's available and everything. Hopefully you guys can make some money off some of that stuff. I think this right here is going to turn into a head and shoulders for AMD, by the way. We got the move. We're getting a rejection already, and I think AMD is going to come back down, and then we could see a head and shoulders. And then all it's got to do is break the neck right here, and then AMD could see these lower lows around $30, $36, $37. All right. Yeah, that's gonna be it, I guess, for the night. Any last minute questions? And probably shut down the stream. Alrighty. Then I'll see you guys later this week. Have a good one, guys. Appreciate it.